Thank you. So now we want to talk about the good stuff, the mortgage, the money. Where you're going to get that money, right? That's the interest. That's why everybody's here. How am I going to get this money? All right. All right. So to qualify for a mortgage, you need the following things. Okay? You need a credit score of at least 620. You can have a little bit lower than that, but you're going to pay more down payment, but ideally, right? 620. 620. You need to have income. It could be from your employer, or if you have a pension, you get Social Security, or a combination of, like if you have more than one person in your family that makes money, goes to work or has a pension, you can do that too. And then down payment assistance, we prefer that will be savings, but you can get a gift from the family. I had a customer when I was doing mortgages that they were Asian, and over there, everybody helps out everybody to get a house. So they all, like once a year, they'll do like a collection. Everybody puts in, $500, $600, $1,000, and then whoever needs a house at that time, they'll give them the down payment for the house. I actually know somebody right now that she got married and she got a $20,000 gift from her father-in-law to buy a house. That's powerful because you can buy, if you only need 3%, 3.5% down, but you have more than that, okay? You have 10, 20% down, then you can buy down the rate. Does anybody know what that is? No. Okay, so let's say you have an interest rate of 4%, and that's a 30-year fix. But if you have money to buy down the rate, you actually pay an additional closing cost. Usually it's $1,000 or 1 point of the sales price. And you take that and you can buy down either half of a point or a whole point. And if you multiply that 1 point that you don't have to pay times 30 years, that's thousands of dollars, and you only invested $2,000 or $3,000. Okay, so that's a way to bring down your rate. Okay, also you can get down payment assistance. Oh, going back to family gifts. One thing that I did creatively when I was doing mortgages, we had this couple that were going to get married. So what they did was they opened a separate savings account or checking account, and on the wedding invitation, they put a little paper saying, thank you for your gift. If you want to give us a gift, you don't have to, but if you do, we'd rather you give us money and you put it and deposit it in this particular account in this particular bank. So then they took that money and it was the down payment for the house. Totally legal. Okay? Something to do. I mean, you can go on the website and say, fund me, the fund me website. Hey, I need to buy a house. I need people to help me out. No, I'm just kidding. You don't have to do that. Don't do that. Don't do that. Don't do that. Okay. Pre-qualification versus pre-approval. What is the difference? This is important. Pre-qualification is just figuring out how much money you make versus how much house you can afford, and then we look at your credit score. If your credit score is 620, they're not gonna dig any deeper. They're gonna say, oh yeah, you can buy a house, you can buy a $300,000 home. Now, I don't recommend that you try looking for a $300,000 home. Just because the mortgage broker tells you that you can afford $300,000 doesn't mean that that's what you want. So you go to your realtor and you say, well, I know I qualify for $300,000, but let's start looking at $200,000, right? I mean, they're gonna protect your interest, okay? But when you get ready to submit an offer, you don't have the negotiating power that you will have if you have a pre-approval. Pre-approval is like the gold ticket. Anybody seen Willy Wonka and the Chocolate Factory? That they have that gold ticket in the candy bar? That's what I'm talking about. The gold ticket. Okay, so a pre-approval means they're gonna do everything they did before, but then we're gonna verify income. They're gonna verify employment. They're gonna do all the things that you would do for a mortgage subject to the property. In other words, your loan is pre-approved. You already know how much money you're going to get. You already know how much down payment you need, subject to finding the property and the inspections. Now, when you're making that negotiation, that offer, and you say the house is worth $200,000, or the sales price, and you offer $190,000, but you have that gold ticket. You attach that gold ticket to your offer. The seller's going to say, well, wait a minute. I have this pre-qualification here with an offer, but I have this other offer with pre-approval. You know, that's 99.9%. I'm going to sell this house with this guy. So they're going to go with that. Wouldn't you? If you were selling a house? Okay, so there we go. Now, what are the types of loans? I'm going to write that one down. Types of loans. FHA, VA, and what's the other one?
Conventional.
Well, conventional, but USDA. But then we're going to do conventional. Now, conventional is a higher down payment. Okay? These are either 0 down payment or 3.5% down payment. Does that make sense? Okay. So we're not going to talk about conventional because conventional is harder. You might have to have a higher credit score to qualify. And if you're a first-time home buyer, you're better off with an FHA or a USDA. Now, FHA is a loan guaranteed by the government. You don't pay, the bank gets paid by the government. You still owe the money if you don't pay. You're still going to get foreclosed, but the bank gets their money through the government, okay? With that one, you need a 550, 580 to 620 minimum, depending on the bank that you're borrowing. Some banks will not. See, FHA says, oh no, as long as you can show proof that you can pay and you have no judgments, your judgment proof, and you can prove to us that you can pay and you have the down payment, we'll give you the loan. But then the bank that underwrites that loan will say, well, wait a minute, no, we're not going to make it that easy because we don't want another 2009 again. We don't want the bubble again to burst. So we're going to get more conservative and we're going to do, you know, depending on the bank, 550 to 220, 240, okay? If you do now a loan, like I said before, with 550, you will pay 10% down in most cases. Now, if you're getting $30,000 in down payment assistance, then, you know, that doesn't matter because the more down payment you put, the less mortgage payment is going to be. So, you know, in a way, that's better. Okay. You have to occupy the house as your primary residence. Can't rent it out, you know, anything like that. You have to occupy. Not an investment home. It is going to be a 30-year fix. They don't do variable, they don't do, you know, 30-year fix. Down payment is 3.5%. Your ratio is 55%. Ratio means that you cannot have, like if you make $1,000, you cannot have more than $550 in debt. So you use this to determine your ratio, your front end and your back end. Okay? No prepayment penalties. If you win the lotto and you pay it off, good, no penalty. Now, with down payment assistance, if you get a loan with Orange County, with down payment assistance, if it's in Orange County, you cannot sell the house for 10 years. If you do, I mean, they're not going to stop you, but if you do, then you have to pay back some of the money they gave you. Let's say they gave you $10,000 and you sold it in 5 years, you're going to have to pay $5,000 back. But realtors say the homes go up in value 2% to 5%, depending on the area. So if in 5 years, your home has gone up in value 5% every year, you're going to have money left over to pay down payment assistance and walk away with something, okay? So that's something to think about. All right. So VA. VA is really simple. If you're a veteran, if you defended this country, you put your life on the line for our freedom, VA says you don't have to pay any down payment. Okay? Your ratios can be 550. If you can pay the bills, you can pay the mortgage, you have the income, you can pay the mortgage, you don't have anything in collections, they'll give you the loan. You must occupy a primary residence, 0 down payment, 55% ratios, no prepayment penalty. Very simple. appreciating the veterans, okay? Now, USDA is a little bit different. USDA is not in the city of Orlando, it's not around here. USDA, I got time. USDA is outside Claremont, you know, like in the Claremont area, the Big Flow area, you know, stuff like that. And these are for rural areas to help families with low income that want to buy a home. Now your credit score has to be 550. Again, it has to be in the rural areas, and it's based on income and family size. Okay? They don't do trailers. They don't do mobile homes. They don't do pools. You know, you can have a house built. If you find a builder that will build it, cool. If not, you can buy an existing home. And by the way, with down payment assistance, you can do new homes and existing home. I almost forgot about that. No rehabs. They used to, but not anymore. Okay. Now that you're ready to buy a home, I want to show this other part because my wife is awesome. Don't laugh. Now you're ready to buy a home. You already made sure that your credit is in order. Check. Your finances are secure. Check. Now you got to hire a real estate agent, which is Gloria, or somebody like Gloria. Okay? Now, there's two ways you can buy a house. You need to, when you're going to get an agent, you have to define the relationship. It's really important. A realtor could be a seller's agent, could be a transaction agent, or a buyer's agent. Okay, I guess I lost that bet. It's after 2 o'clock. All right, private joke, guys. Okay, so a seller is like, for example, you go to an open house, you see a house that you like, there's a realtor there, you know, smiling, baking cookies, you know, come by my house, you know. He doesn't represent you. He represents the seller. He's not going to protect you, okay? Or when you sign a contract, he'll say, well, I'm a transaction broker. I don't protect anybody. I just do the transaction. That's not bad, but you know what? I'm going to spend, this is going to be the biggest purchase in my life, and this is for my family. I'm going to get somebody to protect me. So I'm going to get a buyer's agent. Gloria only does that. She's a buyer's agent, or somebody similar to her, okay? Now, a buyer's agent has access to MLS, multiple listing services, and she can see everything. Everything, right, Gloria? Here, stand over here.
All Florida.
All Florida. Are you kidding me? She can even find stuff on the water. No, I'm just kidding. Okay, she has the market knowledge. She knows the neighborhoods. She knows, I mean, if you want to live in a place, in a particular neighborhood, fine, but it is her job to tell you about that neighborhood, where the schools, where the highways, you know, where the parks, what type of house you get in, when that house was built. She will know everything. Yep. Now, don't give her 20 listings, okay, because she's going to send you like a link to the MLS, or she'll send you 20 listings, but don't make her show you 20. Pick 5. Pick 5 that you like, okay? And then use her, because remember, she doesn't get paid unless you buy, okay? So you gotta be fair, okay? Again, she gives you guidance to the process, and again, she gets paid if you guys buy. Okay, go ahead, Gloria, have a seat.
Thank you.
Mm-hmm. And if you like the way Gloria treated you, there her cards right there. Go pick up some cards before you leave. Okay, when you're doing a purchase contract, there's a lot of important things that need to be in there. Of course, the property address, the price. You know, you're gonna, you know, usually If you think the price, and again, I'm not trying to be your realtor here, but if the price is good, don't offer a discount, because you know what? The way the market is right now, most likely the seller will accept whoever's offering asking price. So unless it's something, and again, when you see a house, for example, you see a house, and you say, oh, I don't like the kitchen, or I don't like the bathroom. You get that a lot, right? Yeah. Okay, but you know what? There is a mortgage. Because, when it comes to buying a house, buying furniture, buying a car, who's the boss? The wife. If you don't like it, he ain't buying it, right? Look at that, yeah, right? Yeah, it's true. Okay, so you have something called a 203K. I don't want to go into this, but I got time. 203K. All right. So just say you see a house that has 3 bedroom, 2 bath. The kitchen has green cabinets, and the bathroom has yellow countertops. They gotta go. This is not you. Well, with a 203K, what happens is we do an appraisal. We do an appraisal, right? And then we also do a estimate for improvement. Let's say, well, how much it costs to replace those, to modernize the kitchen, including the appliances, and how much it costs to add another bathroom or another bedroom, whatever. Okay, so the appraiser takes that estimate, makes an appraisal based on when those improvements have been done, and gives you an opinion, or gives us, the mortgage people, an opinion of value. So if the houses cost, I don't know, $175,000, and the improvements are $25,000, so that's $200,000, right? So we do the closing for $200,000, but the $25,000 is kept in an escrow account of the title company. The people, the people that gave you the estimate come in and fix it, do whatever needs to be done. Then the title company comes and does an inspection. If it passes the inspection, then the home improvement people get the $25,000. It can be done. You just have to be patient. You have to do planning. You cannot fall in love with a house. You have to treat this as a business. You have to treat it. You have to plan for it. Okay? You have to plan for it, because when you get in the estimate, you have to say, okay, how much and how long, and put in consideration that when they start doing the demolition, they might find other stuff that might, so give yourself a cushion, you see what I'm saying? It can be done. Your realtor could help you with this, but also get somebody that gives you that does really good home improvement and with a license and all that stuff, okay? Now, in the contract, you put the down payment, the financing terms, the closing costs. Another thing, guys, if you are going to be a buyer, when you put in the negotiation, ask the seller to include a 1-year home warranty. It costs $300. They're more expensive, but the average is between $275 and $300. Okay, and have the seller put that in the contract. Okay, we'll accept full asking price, but I want a home warranty. Because you know what happens? You buy the house, you're happy. You haven't had time. When you own a home, you have to have reserves. You need to have a savings account in case something breaks, because you're taking care of this. Your landlord, you don't have a landlord anymore. They're gonna come, if something breaks, the water heater breaks, you need to fix it. Your air conditioner breaks, you need to fix it. Okay? So get a home warranty. Home warranty covers the AC, covers washer, dryer, covers the refrigerator, the stove, covers the dishwasher, etc. Anything inside the house, but biggest thing, AC. You know how much it costs to fix an AC? If it breaks down, you have to replace. Let's say you buy a house that's 10 years old. An AC can cost you $3,500. Do you have that money if you're a 6 months homeowner? No. But if the home warranty, you have a home warranty, you're gonna pay a deductible of $50 to $75. And they fix it or they replace it. That's worth, you know? And some people say, oh, but the insurance is gonna go up. So, let it go up $100. I got a $3,500 brand new AC. I don't care. And you have a pool, they'll cover the pool pump, you know, but that's extra. You need to bring the policy to that, okay? So yes, a home warranty. You know, if you have a really good realtor, because you know this realtor is going to make, you know, money out of you, he'll put the home warranty in there. Okay, but don't push it. Try to get it from the seller first. Okay, get it from the seller.
That happens a lot.
What?
That the people request that a lot. The home.
Oh yes, everybody that every of my customers, I tell them, get a home warranty. It doesn't cost anything. Now in Texas, when I did some seminars over there, the home warranty will do the home inspection, okay, for free, as long as you do the home warranty. It's okay. Also, very important, and I know she does this. I know she does this. When you go see a house, she'll be there with a pad. Oh, I like that chandelier. Does it stay? Yes. And she'll write it down. Yeah, chandelier stays. Oh, the appliances. I love that. What is it? Stainless steel appliances. Do they stay? Yeah. She'll write it down. Oh, yeah. They stay. When we do the offer, we include all that. Because guess what? When you go do that final walkthrough before closing, guess what? It might not be there. So they gotta go to Best Buy and get you new appliances.
Interesting.
Okay? So, make sure that's in the contract. Even, you know, I have seen people canceling a closing because to turn on the light has a real pretty, you know, design or something. People flip out because that's missing. Okay? Also, again, chandeliers, curtains, you know, stuff like that. You gotta make sure it's in the contract. What stays, what does not stay. Okay? Also, when you're using down payment assistance, an average closing takes 30 days. Because after you submit the offer and it's accepted, the title company needs time to do the inspections, you know, the appraisal. Because that's what's left, the appraisal, the termite, you know, the cert, you know, to check the property. Or that could take 2-3 weeks, okay? But when you're doing a contract with BPA, those 30 days, you need to add 15 more. Why? Because when you submit the contract, then you get approved. You know, when you submit the contract, you bring the contract to the mortgage broker. They get up. You know, it gets approved. Then that has to be sent. That package needs to be sent to City of Orlando or Orange County. That package has to be approved, and then you know there has to be funding there. So add and let the seller know that you need more time. Leave an open clause. Say, well, this is subject to funding from down payment assistance. If not, then we have to do something. We have to rewrite the contract because what happens if they don't have any funding? They only have 1.5 million, and sometimes they run out of money. So if they do, then you have to rewrite the contract. So the seller has to be ready for that. But hey, if you have that gold ticket, like I said before, if you are approved subject to down payment assistance, he'll wait because he knows he has an approved mortgage, don't you think? Okay. So that's the whole point behind that. Possession date. That's tricky too because sometimes the seller says, okay, I'm going to sell you my house, but I'm going to need 60 days to move out. So there's a lot of ways you can do this. You can ask him for rent. You know, there's a lot of ways of doing this because they might not be able to leave the day of closing. And that's understandable, okay? So possession date. When does the offer expire? You know, this contract is good through, and she's really good at that. You know, this contract is going to expire, you know, 3 days from now, or 2. How much is usually what? 2 days, 24 hours? When you submit the offer?
2 days.
2 days. Okay, so there you go. And then the contingencies. That's the big tricky part, but we'll talk about that in a minute. So, when the contract is submitted to the seller could accept, can say, nope, I got a cash deal. Or they could say, counter offer. They could say, well, okay, because when you're doing an offer, you might want the seller to replace the carpet. You might want the seller to give you an allowance. An allowance means that they're going to take part of the proceeds from the profit of the sale of the house, and they're going to give that back to you to replace the carpet in a particular room, or to put tile, or to do a pressure washing of the driveway, some kind of condition like that. Okay, so that could be a counter offer. He could say, yeah, but I'm only going to pay so much. Or yes, I will accept the offer, but you're asking me to fix the kitchen, I'm just going to give you 50% off. So there might always be a counter offer, but it's okay. Counter offer doesn't mean no. It means that they're interested, but that's just not on the terms. Okay, so don't worry about that. Now, contingencies. Those are really important. Contingencies are funding from the mortgage company, funding the loan, appraisal. Now, a good realtor like Gloria, she will coordinate the appraisal. She'll call the appraiser, hey, and you want to be there, especially for the appraisal and the inspection. Yeah, you want to be there. Yeah, you want to be there. Some realtors don't like that, but you know what? When I was a realtor, I made them be there because I want them to see why the house is only appraising for so much. Okay? Insurance. Usually your insurance, you can get it through whoever you have your car loan with, your car insurance with, Allstate, they get homeowners insurance, get that. Title, that means that's what the title company does. Let me give you the definition of what a title company does. Yes, they do the closing, but the title company, what they're going to do is, from the first, they'll go back a certain amount of time. So I'm going to use 20 years, okay? So they're going to go back and look at that property, go to the county records and look at that property, all the owners that had that property. Now, if you're a property owner and you forget to pay somebody or don't pay somebody, they can put a lien on your property, preventing you from selling the property until you pay that. So that will prevent you from selling the property. So the title company's job is to make sure that title is clear and marketable, that you can sell that house if you have to, and there's not going to be any incumbents on the title. Okay? The other contingency is DPA, down payment assistance funding. The other contingency could be building and structural inspections, like a home inspector. Now, I usually ask the home inspector to go in first before the appraisal, because everything costs money. A home inspection costs about $200, maybe $250, and appraisal is $500. So if the inspector is going to dig deeper, if he sees problems, then you don't want to have an appraisal. You want to get out of that contract, because if it's going to be, you got to make a decision. And the realtor is going to call you and say, we just the inspector went in and they saw a problem in the roof. Now, did you know that if you have a house with a flat roof, you need a third inspection? Because that flat roof doesn't have an attic. So that will be an additional engineering inspection that you have to do, especially if you're doing down payment assistance. They're going to ask you for that. The mortgage company, if it's a good mortgage company, they're going to ask you for that. Then you got the pest inspection, which is termites. Now, if they find termites, that's not a big deal. You can buy a termite bond. Okay, cost you, and you can ask the seller to pay for that bond when you counter offer. Say, well, okay, we found termites. Are you going to pay for this? Because that's not my fault. So you can buy a termite bond, or you can have the seller buy a termite bond that costs, I think, $200-300. And that if something happens and there's more termites in the future, that company will come and fix it without money out of your pocket. You might have to pay a deductible or a copay, but that's not a big deal. Then they'll replace, like if there's damage, they'll come in and contract somebody to fix it. Okay, and they'll treat again. And the termite bond could be for 1 year, 2 years, 5 years, 10 years, whatever. If you have well water, you need to have an inspection on well water. Environmental hazard, lead paint, that's something that FHA requires that. Soil, and you need flood insurance if you're in a flood zone. Okay? And you need to be able to get flood insurance. If you can't get flood insurance, what happens? It does not happen. That you don't get financing. Okay. Now, the offer was accepted. Now you wait. And this is the most critical part. Yadira, go ahead and stop for a second. Okay.